All right, boy, back to work here tonight. Hope you guys had a fantastic day. Another great day comes to an end. Boy, got some nice big moves this afternoon. I always get excited whenever we see big moves into the close because that usually means some big trading opportunities the following day. We have a lot to cover in a very important video here tonight. I get some great trades I'm tracking for Wednesday, and I'm going to go over all my favorite trades in the video here tonight. Then we get a game plan to make some money on Hump Day. Before we jump in, though, and get the party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoy this stuff, hit that like button. Give me a shout out in the comments section below. Thank you so much for tuning in, supporting the channel. But enough of the intro, right? Where are the best trades setting up for? But I'll tell you, it might be a very busy day tomorrow morning in our trade room. Boy, looks like everything's bearish right now, doesn't it, right? S&P looks pretty bearish. NASDAQ looks pretty bearish. If you just looked at the chart in front of us here right now, you would say, my goodness, that's a very big reversal, a big bearish reversal. But for a couple reasons tonight, we'll talk more about this, of course, as we go deeper into the video here this evening. But this smells like a bear trap. There are two different reasons. Both the S&P and NASDAQ, they smell like bear traps right now. I would love to get some reversals heading back up into ranges overhead. Now, we got to be careful, right? Because we have a lot of bearish momentum right now. So we'll talk about the best way to capitalize on some potential bear traps and some reversals. Tomorrow could be a very, very good day if the bulls get their way. We're going to cover those details on the video here tonight. And speaking of bulls, boy, the oil market looks poised for a breakout running higher. We've got that big kind of gap we saw a few weeks ago off the OPEC announcement. Buyers look poised for a breakout going higher, but there is a lot of resistance up overhead. Could this be a bull trap overhead? Could we be looking for a short off the high? We'll talk about why that definitely may be the cards for tomorrow. And we'll also talk about how to capitalize on that breakout. Got a bunch of breakout patterns we're watching here on oil as well. So, boy, there's no shortage of trading opportunities, money-making opportunities setting up here for Wednesday. Before we go into the trades, though, for tomorrow, let's all kind of get on the same page here because there really are three main components that you want to be aware of for tomorrow. The first one, of course, is that weekly inventory report for oil traders, right? If you're an oil trader like we are, you want to make sure you're aware of that. I usually buffer between about 10:20 and 10:40. So about 10 minutes ahead, 10 minutes afterwards, sitting on hands for oil. Get to oil early, or usually early on inventory day. Be aware of that tomorrow. One of arguably the biggest news events of the week this week, the FOMC meeting minutes. Everybody is speculating on whether or not the meeting in June will be a pause or whether or not we could possibly see some rate cuts at the end of the year. So we definitely expect the markets to be obsessing about the FOMC minutes tomorrow afternoon. And the third thing, you know what I'm going to say. I don't want to say it. I don't want to talk about it anymore. I want the debt ceiling drama to be behind us, but unfortunately, there's no way around it. We keep hearing more updates back and forth. We're getting closer. We're still pretty far away. So that is definitely something that was what is being blamed on or being blamed as a cause of that big drop here this afternoon. Like I mentioned last night, that is a big wild card for us. Really, until they get this debt ceiling theater out of the way, right? They're going to come up with a plan, right? They're going to get a negotiation done. In the meantime, though, they're going to make these markets a bit yo-yo-y, right? Aren't they? So that is a big known unknown. That's the wild card for tomorrow. We know about the petroleum status report at 10:30. We know about the FOMC meeting minutes tomorrow afternoon. Those are definitely on our radar. Those will be good catalysts. But again, when will we hear? When will we hear from Sleepy Joe, right, and McCarthy on the House floor? When will we hear more about that tomorrow? That is definitely something that we're watching, kind of a known unknown. Now back to our charts, though, right? Because the money is made on the charts, right? And if you like making money, I would definitely recommend you watch all the way to the end of this video because every trade I talk about tonight can be applied to your favorite markets. We'll cover some long side trades, some short side trades, and you know me, I will find a way to wrap it all together and make it worth your while to watch all the way to the finish. Real quick here, guys, S&P first, NASDAQ second, and of course, we'll wrap tonight on the crude oil. This is a 7,000 tick chart. All the time frames are tick charts here tonight. You can find those in the upper left-hand corner. That is the 21 EMA, the exponential moving average, in case you're interested. And as always, linked up down the description of the video tonight, and very important for this evening's video, I might add, are going to be 60-minute charts, 4-hour charts. I like to use the 60-minute chart to give me a directional bias, and I like to use the 4-hour charts to give me some bigger picture levels, which will be pretty important, especially the 60-minute time frames in tonight's video. So if you want to see more of the bigger picture stuff, things I use to find my favorite trades each day, definitely check the links out down in the description of the video. With that said, what's the most important factor that we have here right now on the Emini S&P? There are, in my eyes, there are really 3 important factors. One is the strength of this move down. That's a very strong move down, right? And we have to be aware that the bears, of course, have a lot of the short-term momentum, right? Momentum, of course, is at their back right now. There's a range down here, so it's pretty bearish in the short term, right? The second big clue is, and as I mentioned in the introduction, at first glance, you would think, boy, my goodness, this is a reversal. Yeah, but if you go over to the 60-minute chart, linked up in the description, you will quickly see that yes, I agree, it is a very strong bear move down, but we are now conveniently right around those highs from, remember that nasty range we spent what felt like a month, right, chopping around in, really up until middle of last week, right? This is kind of a classic case, what it feels like right now, until we see more tomorrow. It feels like a classic case of a breakout pullback, right? We oftentimes see these ranges. Market was bullish into a range for a few weeks. It breaks out, rips back down, and now we're kind of sitting right here, right? And oftentimes when you get these really violent breakouts like this, nobody wants to buy high up here, right? So they wait to break, right, to pull back, and then we can get that run up from there. That's what it smells like right now, right? That's the second key component, is where we are, right? We've run lower, but we're really sitting right on some of those key highs here off that big range. It's much easier to see that, of course, on the 60-minute chart. And the third component on this, the third kind of big clue of this is, remember, up until a few hours ago, we're bullish into a trading range. So you have to think right now, there's a good chance here buyers are going to re-enter the market at a lower price and try to run this thing back up into that trading range because, as we talked about last night, ranges act like magnets. Now, of course, I could be wrong about this, right? This market may be, right, a real reversal, and we'll talk about how to trade that, right, if we aren't in a bear trap environment. So knowing this, right, knowing what I've talked about so far, what would my favorite trades here be for tomorrow? This is an easy one. My favorite trade for tomorrow, whenever we have a kind of a bearish market into a trading range, but I'm looking to be a buyer, bear trap, right? Bear trap. One of my favorite trades in our trade room, if we have a range like this, is to get underneath that trading range, right? Dig into some of this key support down here, trap in some of these bears, and just squeeze them, right? Squeeze them up from there. These can be very, very good types of reversals. I want to talk about that in a lot more detail here in a moment. We may not get that kind of bear trap fake out breakout, right? We may not get that fake out breakout off the low here. We may end up rolling higher here, right, as buyers come in and kind of buy the proverbial dip, as we say. And so I do want to talk about how to tell the difference between the move going higher and whether or not that's a pullback to be sold, right? Because couldn't this also be a breakout pullback, right? Couldn't this also be a range? And couldn't that be? Yeah, of course it could be, right? So I want to talk about that as well. We're going to cover all the details. That way you know how to make money in different scenarios. Because remember, it's very difficult to predict what's going to happen right now with the debt ceiling talk and blah, 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 right? So it's better to kind of game plan and go through some scenarios. So let's start first with what I hope happens. And then we'll talk more details about, right, if we don't get that, and we'll kind of game plan from there. Now, if we go lower here, one of my favorite trades is called a crown reversal off the low. Now, you guys are learning stuff like this in the free trading course right now. Remember, we're very bearish overall right now, or at least in the short term, right? So I have to be careful just buying down here. You know what I mean? I'm optimistic. This is a bear trap, but again, this is very bearish. It could easily keep going lower. I'm not a big fan of trying to pick a bottom like this. What I'd rather do is let the sellers basically commit to this, right? Let them try a couple times. And what you want to do is you want to, whenever you're trying to reverse a very strong move like this, there are two things you need to do. One is you have to get some sort of catalyst to get that reversal. And the catalyst here are going to be stops, right? We need to get some catalyst, some fuel, as we say, to reverse this thing back around, because again, it's an overall, very bearish in the short term. The next thing is because we are bearish in the short term, we really need to be buying as low as we can. And so we need to get literally what we call a bear trap in our video classes, right? You guys are learning these in our free trading course, right? So what we want to do is you want to see bears try once, you want to see them try twice, and try to get that bear trap, right, to kind of light that stop run and run higher. Now, a lot of times, guys, they'll do this. They'll rip lower, they'll jam off the moving average, right? Bears once, bears twice, you'll get that beautiful bear trap. We call these crown reversals in our trade room. And then as we begin to roll higher, we get a beautiful follow-up trade. Watch closely. Draw the trend line off the high, find that channel off the low, and then look left. Find some prior swings. And guys, any of the entry patterns you guys are learning in our free trading course, it could be a trap like this one, or a seller failure pattern, or a pullback combo. Could be a strength trade, right, off of that low. But this is kind of the scenario you want to be looking for going underneath that trading range. A 2-try failure with that little bear trap entry, right? Because you want to buy as low as you can because we're overall bearish in the short term. And then as we roll higher, think about that first test, right? Using any of those entry patterns you guys are learning in that free trading course. Which reminds me, I know that a lot of you guys have already taken that free video course. You've learned all the bear traps, the failures, using stops as fuel, drawing channels like this. But listen, if you're watching for the first time tonight, or if you're one of the few folks who haven't taken that free video class yet, I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy you'll learn in that short video series will show you a simple trick to know exactly where the best winning trades will be each day, and I'll make it easy to start making money each day consistently. I'll teach you my 4 favorite entry patterns, things like traps, things like failures, and a whole lot more advanced variations of there. If you're taking too many losses, if you're missing the best trades each day right now, definitely grab that link, take that free video course. It is perfect for someone trying to make the jump into full-time trading, and you'll learn all about how we use bear traps to trigger short squeezes. Now, I want to talk more. I want to talk about if we go higher here, but let's also, before we talk about going higher here for a moment, what's the game plan if everything, if all hell breaks loose tomorrow? Because again, we're very much subjected to this wild card, right? That is the debt ceiling. How would we look to short this if it goes lower? Now, the most important thing is, if we end up going lower, you're going to want to see it continue, right? So, for example, we may punch lower, but we may not be able to get the continuation, right? So bears may try to continue it, but they struggle, and we bam, right back up again, right? So the first thing is you're going to want to see it take off lower, but also now continue going lower, right? It has to continue and keep running lower. And we'll obviously talk more about this tomorrow in the trade room. Once that happens, I mentioned earlier about breakout pullbacks, right? How oftentimes when we're in a range and we break out of a range, oftentimes this case the underbelly, if you will, right, of that range becomes a big area of interest in this case for the sellers. What I'll usually do in these scenarios is I'll begin to go out and look for new channels. In other words, I'll mark off trend lines off the lows. I'll go up and find the highs, and then start looking for that first pullback. I want to be somewhere up around the high of that channel, somewhere up around, right, kind of the low of that trading range, right? I want to basically use an area of resistance. Now, when you get pullbacks like this, if you can get above a prior swing, right, for a trap, That's always the best one, right? It's always the best one. A lot of times, though, we don't have that trap high. All we get is above the moving average. If you get above the moving average, now wait for buyers to come in and try to buy it. If they are successful, that will squeeze, right, going higher. But if they're unsuccessful, though, then we look for that, what you call a failure pattern, right? Kind of a one try for the buyers. Buyers come in, they try to buy it, and we're trying to sell there, right, into those stop losses. Again, I want to make it very, very clear that we have to not only see a shot lower, but we have to see it kind of continue. Right? None of this strong shot lower and then try. That is going to be a potential reversal right there. Right? That is the sign of a bear trap. Right? We're seeing higher highs, right? Higher highs in price as we go. If we roll lower and begin to roll lower, right? That'll be a sign these bears are continuing and looking for more. Right? And if they are looking for more, we've got a lot of support down here, 41.23, 41.20. You'll see these bigger levels in pretty good detail on the 60-minute chart. I've got linked up in the description. All right, guys? So one of my favorite trades here, right, is that bear trap off the low, like I just described. And again, don't forget, if we do get that crown reversal, that bear trap, and it punches back up, remember, these things can really whip and run. So find that new channel off the high, mark that low, and we'll go looking for whichever entry pattern we can get here right off the low of that channel, right? You may not get that beautiful reversal. You may not get that bear trap, right? It may simply punch back up, and we're going out and finding that channel off the highs and then grabbing traps, failures, pullbacks right off of that low. All right, guys? So that is one of my favorite ways to trade this thing going here for tomorrow. Now, how do we do this going higher here, right? At what point can I sell this back down? Right? How do I sell it back down? And also, too, how do I buy it? How do you know the difference here? Let's talk about this now on the NASDAQ. Right? The NASDAQ is very similar to the S&P. Pretty much everything we talk about tonight can be kind of interchangeable between the two. Now, one big difference on the NASDAQ, and you will see this when you go into the description and grab that 60-minute chart linked up in the description. You will see right away the NASDAQ is pretty clear. This is just a big pullback in a bull trend right now. All right, doesn't look like a full-blown reversal just yet. Now, could it continue tomorrow? Absolutely, right? We may continue going lower, and it may confirm a full reversal. But as of right now, when you go into those higher time frames, again, the 60-minute time frame is what we care about right now. Look at the 60-minute. We're simply not there yet. This is it's been a very bull market over the past month or so on the NASDAQ. We're simply in a rather sharp pullback mode right now as far as 60-minute chart says. So that's one big difference. The S&P looks a lot more bearish than the NASDAQ does, in my opinion, on the 60-minute. The next thing here is we're very similar, of course, right, to the S&P 500. Let me clean this up here, get rid of some of these measured moves. You guys are learning about measured moves, right, inside of the free trading course. We basically had that big run up, and this is ultimately just one big range right here, right? It's all basically one big trading range. So just like we talked about on the S&P. Now, the S&P, of course, has a big support level down here. The NASDAQ, not so much. But we're very similar in that sense where we have that range above us still holding on, right? I would imagine, according to our 60-minute chart, still not out of the woods yet for the bears here. So we are looking at this right now as a potential bear trap until proven otherwise here for tomorrow. I have a lot of support levels down below me on the NASDAQ, which would make for some beautiful bear traps using that range as a magnet. Again, use that same game plan I gave you a few moments ago on the S&P. The next question is going higher. Right? How do we sell it going higher, right? Because, as I mentioned on the S&P earlier, this is a lot of bearish momentum right now. So, anytime we see a real strong move like this into a trading range, you have to think there's going to be a lot of bears, right? Above highs here, high here, right? Above here, right? There's probably a lot of sellers who are trying to short this thing back down. The challenge, of course, again, like I mentioned earlier, is that 60-minute time frame is still overall bullish. So if I want to sell this thing, what I want to do is I want to let the buyers show me if this really is a pullback or if this is a full-blown reversal. So as we go higher, what I'll be looking for those. Well, in my free trading course, we talk about a reversal, right? What will happen is it'll pop up, the buyers will hold the pullback, and they'll jump, right? See right here how we go lower, right? Bears take it lower, they hold the pullback and they jump, right? That's a breakout. So if the buyers want to get a reversal, they're going to have to hold that pullback and jump. So all we have to do tomorrow is simply wait and see how that pullback goes, right? If those buyers come in, they try once, they try twice, and they're not getting that jump, right? They're not getting that lift off, right, for that reversal. At that point now we know we have the buyers all locked in, and we can now use basically their stops, right, for a failure pattern back down into that trading range. This is a classic kind of setup that we see quite a bit in range-bound markets, right? So in this case, bearish market into a trading range. You simply wait for that pop up, right? Wait for that pop up. And again, if the buyers can hold that pullback and jump, and I'm going to talk about 3 different ways to trade that here in a moment. Don't you worry. We'll cover the long side here, absolutely. But if we start seeing those lower highs in price, right, price pulling back, buyers once, buyers twice, okay, those are signs of exhaustion. The buyers are in. All that bear momentum says, right, just give it a nudge, right, and knock this thing back down, right, and basically use all those buyers, right, use their exits as some fuel to run back down to retest the low, right? Target's pretty easy at that point, right? Target is back down to retest that low there, all right? So that's how you want to sell it, right? That's the kind of the clue you'll use to know if you can sell this thing off of the high. There really are 3 different ways we can buy it, though. Let's say, for example, that we don't pop up and hold and go. We may simply race higher here. Again, right? This whole move down was basically off a press release or press announcement based on the debt ceiling, right? That was all it was. Pretty much all it was based on here this afternoon. So until we see him kind of hold this area, it's very reasonable to think that a lot of buyers are waiting down here, right, to buy this thing back up. So if it does end up jumping and running higher, now watch closely. Okay, we talk about this a lot in our trade room. Strong move, shallow pullback, higher high in price. Okay, strong move, right? So real strong pop. Here's the kicker though. Shallow pullback, higher high in price. Okay, this sets up for a trap entry, right? Traps are always going to be your best entry when you've got those big strong pops going higher. The key though is notice the difference in this setup, right? It's a higher high in price, right? It's not like this going up, buyers once, buyers twice, lower highs, right? Remember, that is the sign of basically a short, right? That is a sign of buyers failing. If we end up popping higher, we get that shallow pullback and that higher high in price. Now it sets up for one of my favorite setups. This is a bear trap, or it's a trap setup, all right? So keep an eye on that. Also, keep in mind too, sometimes we get lucky and we can draw a trend line off those highs, bring it down off that low, and it lines up right around the lows of those channels. So that could also be, right, a nice little add-on there for that reversal. And again, think about that range magnet, right? These ranges overhead are going to be the magnet. Now, in that same vein, sometimes we'll pop up and we'll grind, right? We pop up and we grind, right? We call this a pop and grind reversal. Sometimes it'll pop up like that, right, and begin to grind going higher. These are easy. Draw a trend line off those highs, bring it down off that low, right? And then what do? Look left, right? Find prior swings. Swings are where your best entries are going to be. We can look for traps below prior swings, rope in the bears, use their stops for a fuel with a failure pattern into a pullback combo. Now, whenever we get these pop and grinds, it's relatively easy because the first leg, right, and the third leg are usually pretty symmetrical, right? So if you're wondering, okay, I know where to buy it off of, right? I know where to buy the pullback on this. The next question is, okay, where's my objective? Where's my target going to be? We know that range, of course, is a magnet. That's a pretty easy one, up around 13,900. But remember, anytime you see these pop and grind reversals or pop and grind channels, as we call them, mark that, right? Mark that first leg. Use the size of that first leg and just simply project it off that low, and that will give you kind of where that, what usually ends up being the, kind of the very top, right, of that move before we get that big correction. So keep an eye on that, right, as we go higher. And the last one here is simply a 1, 2, 3 reversal or 1, 2, 3 breakout. Earlier on this morning or early on this afternoon, it was that strong move down, that pullback, and that jump from there, right? We call these 1, 2, 3 moves in our trade room, right? So if we pop up, we don't, of course, right? We don't pop and grind, right? We don't pop, shallow pullback high. You know what I mean? We don't do the first two we talked about. We break out, we pull back to the moving average, and we jump off of that moving average. Now, obviously, I'd like to be in this thing before that happens, but sometimes we don't get that opportunity, right? Sometimes it pops up. We're waiting for the buyers to try a couple times. We can short into those stops back down to that trading range. But again, this could easily be a bear trap if they hold off of this moving average. Now, mark that high, mark that low, and go looking for really any of the patterns. What I usually do is I'll mark that trend line off the high. I'll bring that channel all the way down to that big low like that, right? Anchor it nice and low, and then go out and find the entry pattern off the low of that channel. Again, if we get lucky, it'll be a trap, right? Maybe it's going to be a failure below the moving average. As I talk about in the free trading course, I don't really care which entry pattern I get, right? A lot of times they're failures, they're trap setups, pullback combos, but I don't want to miss that first test, right? I don't want to miss the first test off the low of that channel. All right, guys. And again, right, that's your first leg, third leg, right? That'll give you an idea of where that objective is going to be. All right, guys. So I think a relatively easy game plan here on the NASDAQ. Again, we hope we're going to head lower first, right? Hope we head lower first, trap those bears in, and squeeze back up, right? If it does end up popping higher here, be aware of the signs of exhaustion. 1, 2, back down into that trading range. Because again, it is a pretty bearish move overall here. But again, if they hold that pullback, and we jam going higher, now we're finding new channels. Now we're buying pullbacks off the low of that channel, or they may simply just reverse it, right? Pop up, grind, going higher. That grind is an easy giveaway, right? Mark off that high, mark off that low, find those swings, and don't miss that first test off the low. All right, guys. I could definitely keep on talking about this all night, but those are my favorite setups here for tomorrow. We'll definitely talk more once we know more tomorrow morning, as the news comes out tomorrow, and as we hear more about the debt ceiling. And Nasdaq's ready, S&P's ready. How about some crude oil to finish up the session here right now? Oil is looking pretty bullish right now, isn't it? We talked about the fact that we were looking at a potential big 60-minute consolidation range. If you watched last night's video, I'll put the link in the description of the video here tonight. On the 60-minute chart, though, it's pretty much a bullish trading range right now. And we ultimately have both a 60-minute bullish range and now a bull market into this range. Right? These are pretty straightforward, okay? So when you get a bull market into a trading range like this, we know that buyers are trying to buy low, right, which they did already, and then also, right, punch up through the highs, right? So buyers already got their entry long off the low of that channel. Okay, and now the next step is they're trying to kind of rotate this higher and ultimately get a breakout going higher. It's a kind of a slingshot, right, as it rotates off the low of that channel, right? So we're expecting buyers to be trying to break this thing going higher, right? And we've got some breakout patterns we're watching. The challenge we have right now is this is a ton of overhead resistance. And as I mentioned in last night's video, there is a very good possibility here that this is nothing more than one big trading range. Now, it's much easier to see in the 60-minute chart. Right? There's a very good chance here this is one big range developing here, and therefore this could be easily ripe for a bull trap. Right? This could easily be an area where buyers get caught and we end up rolling back down into that trading range. So those are kind of where my two favorite trades are coming from right now on the oil. Right? Now, how would I sell off the high of a bullish market like this? We talked about this in the opposite direction, of course, on the S&P chart at the beginning of this video. If we have a lot of bullish momentum right now and we're running into resistance thinking, okay, I'm open to a short, right, off the high of this. What's my problem? My problem is momentum. And so when you're trying to turn a market like this over, you need to sell as high as you can. That way you're not selling low into where more buyers are into the market, and you need to use stops. This is where a crown reversal pattern is always going to be the best, right, for this scenario. We need to get some fuel, right? We need some sort of catalyst to turn this thing around. And to do that, we need to trap some buyers in, right? Because again, remember, think about it, right? if we don't have momentum on our side, right? Momentum is very bullish in this scenario right now. If I want to sell off the high here right now, right, I need to turn that momentum around. It's not as easy as it sounds, right? It's not as easy to turn momentum around. So what I have to do is my favorite way to do it is to let the buyers commit a couple times. Okay, that way, if they are successful for that breakout, then we know, right? Then we know for pretty much certainty now we have a bull trend, and now we can go out and find that channel, right, and grab what is a much more reliable trade, right, off of that next pullback. Anyways, I digress. We want to give the buyers the benefit of the doubt. Let them try a couple times, because then once we do, then we're not just stepping in front of a freight train. We can also use their stops, right, to be the catalyst, the fuel, right, for that roll back down again. Now, here's one more problem you can remember, is that if we're bullish like this, I don't want to sell low. You don't want to sell low, because oftentimes what happens is you'll see a channel like this. And so if you start selling low, you're selling right into a bear trap. So you don't want to sell low in a reversal. You want to sell high. And that's exactly why I say a crown reversal is always going to be your best bet, right, for that reversal. Now look at kind of how this works, right? We run into overhead resistance. We give the buyers the benefit of the doubt. We let them try a couple times to see if they are strong enough to break through it. Okay? It's not a very reliable trade buying up here into resistance, right, with a range below us. It's just not a good spot to be a buyer, right? So there'll be plenty of times where we don't have an edge in either direction, like in this scenario, and it's better to wait and look for a better trade, in this case, off this reversal. So buyers try twice here. Their stops now are just begging to get lit up. And then we have to make sure we sell as high as we can, because we don't want to get caught, right, in that potential bear trap. Right there. This is where that trap entry comes in. You want to sell as high as you can. Okay. Once you understand this principle, when you're trying to go against momentum, you want to sell as high as you can to avoid the trap at the low. And you also want to make sure you time the entry once the buyers in this case are fully committed, because you will need their exits. You'll need their pain to turn this thing and roll it over. Right? That is pretty much the only way in which we can safely sell a market at like this. Now, how do we buy a breakout? What's a breakout looking like? We talked about 3 of these a few moments ago, right? One would be that strong pop-up, right? Real strong pop-up, strong pop, shallow pullback, higher high in price. What do we always say? Traps, baby, right? That's what we call these 2-try traps. It's a very simple trap setup. Remember, on this one, the emphasis is on that first leg. Right? It needs to be a very strong first leg. The shallow pullback drives the pullback traders crazy, and the higher high confirms it's not a reversal, right? That higher high confirms it's not a reversal. It's more likely now to be a 2-try breakout. Okay? The other one, of course, is that pop and grind. Right? The pop and grind, of course, is simply a pop up. Now we don't pull back and struggle back down again for a crown reversal. We pop and we grind, right? Easy. Mark off that high, mark off that big low. You got it. Find those prior swings. Swings are where traps live. Get below the 21 moving average. That's where failure patterns live. Failure into pullback combination. We call this the price action cycle in the free trading course, right? So that is a scenario very, very common after a range breakout. We'll keep an eye on that. Or don't forget, it could pop up, right? Hold that pullback and then jump off that moving average. Okay. These are not as common, but you want to be ready for them. Right? Remember, in this case, the strong move is pretty strong. It pulls back to that moving average, but it's the follow-up trade, right? It's the follow-up leg, right? It's the leg that comes off the moving average. That's the one that really makes the most amount of sense or is the most important. Mark off that high, mark off that low, go find those swings, right? And don't miss the first test off the low of that channel. And again, I'm keeping it simple right now. It could be a trap, it could be a failure, it could be a pullback combo, right? Any of those will work. If the buyers can get their act together, if the buyers can push through this area for tomorrow, we've got, and you'll see this on the higher time frame charts linked in the description, we got 76.70 70, right? Basically 77 even is a pretty good objective there if the buyers get what they want. One last thing too, if we do end up dropping off the high, be very careful selling down here, because again, on the 60-minute, you'll see it looks like there's one big trading range. So if we do end up dumping off the high here, it's probably a good idea to get something like this again, where we start seeing the bears come in, try a couple times, and get that trap below that low. So if we were to get that reversal off the high, if it dumps all the way back down again, be very careful chasing it, because again, there could be one big trading range here, and you don't want to get caught chasing it in a range-bound market. Let those bears try a couple times, grab that crown reversal if you can, and buy it right back up again. All right, guys, those are my favorite trades for oil here tomorrow. Again, we get some news tomorrow morning at 10:30 Eastern time. So we'll definitely kind of roll with the punches tomorrow, and who knows, we'll see if we get any more updates regarding the debt ceiling. Either way, though, the game plan is ready. Tomorrow morning, we're going to get together 8 o'clock Eastern time, and we'll trade together. You know, there really isn't any better way to learn and trade along than to come out and do it with me in the morning trade room. We open up every morning, 8 o'clock Eastern time. I have all the software templates. I have a whole worksheet that we qualify every trade together. If you're not getting the results you want, if you're missing too many good trades, if you're taking too many losses, you will love our trade room every morning. It is the best place that you're trading on the right track. I'll put all the membership links, all the free course links, everything talked about tonight linked up in the description below. If you have any questions or you need any help getting access to any of the video classes, don't be afraid to call the office. We got live chat in the lower right-hand corner. So if you need help, we're here to help every step of the process. Guys, thank you so much for watching tonight. Be well, be nice to each other out there. Be here next time. Adios, amigos. Bye for now.